Good morning out there, folks. This is Darius Dale here to present our macro minute for Tuesday, February 8th, 2022. Starting with markets, we have stocks down this morning, commodities down, crypto down, dollar up, global bond yields up. Big movers, we have copper, WTI down off about a percent a piece, Ethereum down 2%. On the macro front, January's NFIB Small Business Optimism Index contributed to three themes that resonate with our outlook for the U.S. economy. Number one, steady price pressures or sticky rather price pressures in the near term. So the higher prices index came in at 61. That accelerated to 61. That's the highest number we've seen since December 1974, a long time ago. The compensation index ticked up to 50. That's an all-time high, and that, as you know, ever is a long time. Number two, waning price pressures in the medium term. Price plans they tick down to 47. That's the lowest print we've seen since September. And then compensation plans tick down to 27. That's the lowest print we've seen since August. And then lastly, number three, growth continuing to slow slow to and perhaps through its trend over the medium to long term. Hiring plans tick down to 26. That's the lowest print we've seen since November. CapEx plans came in unchanged at 29. That's off from the October 21 cycle peak of 31. And then inventory accumulation that ticked up to 9. That's the highest print index level we've seen there since December of 2005. Taking it to the chart, this inventory thing is becoming a big deal. So now, at first it was Delta, and now it's what else are we going to blame? But if you look at inventories in terms of their contribution to the GDP headline GDP growth rate over the past 2 quarters, it's actually astronomical. So in 3Q, we're at 96% of all growth was inventory accumulation, and it's 71% in Q4. And there's really no impact from coronavirus in Q4. Maybe at the tail end of Q4, a lot of the impact we're likely to see is concentrated here in Q1. So we may actually even see a further inventory build. And as we all know, inventory builds need to they need to get cleansed out through the system over the medium term, and that, in our opinion, could in fact weigh on growth and potentially slow growth through its into and through its trend again over the next several quarters. So that's something to be aware of. With respect to our global macro risk matrix, overbought signal in the euro, 10-year Bund yield, 10-year JGB yield, and 10-year Swiss yield. Nothing oversold. S&P 500 is still bearish VAMs at 8% of downside and 2% of upside. WTI is still neutral VAMs with minus 8% of downside versus 4% of upside in its probable range. The Bloomberg Dollar Index is still bullish VAMs with minus 0.3% of downside versus 1.6% of upside. 10-year Treasury yield still bullish, fams, minus 20 basis points of downside versus 11 basis points of upside. Bitcoin still bearish, fams, minus 23% of downside versus, or it's at its upper boundary of its probable range. Ethereum's at its upper boundary of its probable range as well, still bearish, fams, with minus 29% of downside. And then lastly, gold neutral VAMs with 2% downside, 2% upside. So still a fair fight in gold. So with that, Darius Dale presenting our macro minute for Tuesday, February 8th, 2022. Best of luck out there today.